In this video, I'll be showing exactly how much tax-free and truly passive income I've earned in the month of January. My ultimate goal is to reach an average of £4,000 a month in dividend income. In order to achieve this goal, I will add to the account regularly, never take anything out, and of course reinvest all dividends. In addition to this, I will also invest every penny I make, both directly and indirectly through this channel. It's going to be a long journey, so I'll need to break it down and focus on one small milestone at a time. Each time I reach that milestone, I'll be sure to celebrate in some way, however small, to really mark the achievement in my mind and motivate me to keep striving for the next one. The very first milestone I've set for myself is an average of £10 dividend income per month to get the ball rolling. £10 a month might not sound like a lot, and that's because it isn't, but I'm a big believer in setting smaller, more frequent milestones, especially when just getting started with something new. My first ever dividend was paid into my account on the 11th of January by National Grid in the utilities sector. Whilst on the one hand it's hard to get too excited about £8, on the other it officially marks the start of my dividend investing journey. Although I've already seen around £160 of capital growth in my account since starting around 3 months ago, it's actually this much smaller amount of dividend income that motivates me more due to the much more consistent and reliable nature of dividend income. This monthly dividend chart keeps track of the actual amount of dividends that I've earned each month. The downside to this is that it will vary significantly from month to month. This is dependent on when the payment dates of the stocks I own happen to fall, and I find this inconsistency less motivating as I like to see steady growth. And for this reason, I also keep track of my average monthly dividend income so I can see the steady growth, which is much more encouraging to me. To work out my average monthly income, I simply take my total expected yearly dividend income and divide it by 12. As you may have noticed, my current average income is £14 per month, which means I've surpassed my first milestone of £10 and I'm now into the double digits. My next milestone is £25 per month. I've been told by more than one dividend investor that once you hit the £100 a month mark, everything seems to speed up after that. Here's a chart showing the dividend yield versus dividend yield on cost numbers for the stocks I own. For those who may not know, dividend yield is simply calculated by dividing the annual dividend by the current share price. Dividend yield on cost, however, is calculated by dividing the annual dividend by the average price you paid for the stock. Whilst the stock's dividend yield will vary daily due to changes in the underlying asset's share price, your dividend yield on cost will remain fixed until either you buy or sell shares, which will alter your average cost, or the company raises or cuts its dividend. As you can see, my yield on cost for both Tesco and Bluefield Solar is significantly higher than the yield I'd get if I were to purchase the stocks today. This is simply because the stock prices were lower when I bought them. However, the annual dividend amounts remains the same, so I got a bit more bang for my buck. On to dividend income by sector now. I've been focusing on building a solid foundation by choosing stocks from what's known as the defensive sectors to get started with. Companies in these sectors produce products and services people need rather than want, and for this reason defensive stocks are typically affected less during declining markets. The flip side to this is they don't tend to do as well in the good times. However, I've recently started to invest more heavily into ETFs, as I think the simplicity, diversification and peace of mind they offer is hard to beat. More on this in my portfolio update in a few days. On to February's upcoming ex-dividend dates now. The FTSE 100 currently has just one ex-dividend date in February, and it's for Imperial Brands in the tobacco industry. Imperial Brands offers a very attractive dividend of 7%. In addition to this, the tobacco industry as a whole has been a fantastic investment over the past few decades due to high profit margins and a loyal customer base. That being said, Imperial Brands falls into the category of a sin stock. Sin stocks are companies involved in activities that are considered unethical, such as alcohol, tobacco, gambling, adult entertainment or weapons, which can put some investors off. Imperial Brands has clearly had a good year with a 26% gain and probably has many more years of solid dividends to offer. However, the number of tobacco users has been in steady decline globally for many years now, which makes me a little bit nervous about investing in the industry for the long term. Let me know your thoughts on the sustainability of the tobacco industry in the comments below. Check back next week to see my full portfolio update, including 2 new stock purchases.